This is our Forex blog for June 5th, 2012, and part of our easy three-step Forex trading system is step one, identify the currencies that are most strong and most weak, and buy the strongest currency versus the weakest, and look for sells in the weakest versus the strong. Our new currency meter allows you to sort these, so it makes it really easy to identify the best ones. You can see as I move this chart window up here, if you right click on it, there's a new option called Set Chart Group Option to A, and as long as you can see, these are all labeled with a red dot here, as is this blank chart right here. This one is set to chart symbol number 1 and chart group option A. So basically what this means is it allows us to use our real-time only tools, which in the past, if we would have linked to these and sorted them, we lose all of our real-time data, which is obviously defeats the purpose. Now you can simply right-click and sort these from strongest to weakest, and you're gonna get the dollar is strongest, then the pound, then the CAD. So you don't want to buy or sell the dollar or the pound dollar, or buy or sell the dollar CAD. You want to buy the dollar versus the weakest one, the yen or the euro. Most people don't want to trade the dollar yen because it doesn't move that many pips per day. So obviously looking for sells in the euro dollar makes sense, or buys in the dollar Swiss. Looking at the histogram, this is made up of 5 of our best statistical tools. 3 of them measure the percentage of dollar pairs going up or down using different statistical measures and different time frames, and 2 of them measure the intensity, one on a 5-minute basis. How far did this 5-minute euro dollar pair move versus all the other pairs up or down? And so anytime you have massive strength at or above the dotted 80 level, and underneath that we have the 15-minute trend, hourly, daily, weekly, monthly. The more time frames that are up, the higher the odds of that trend not only continuing but going a number of pips. So you can see the euro was quite weak earlier today. It was one of the weaker ones. The dollar was one of the stronger ones. So basically we're looking for euro dollar sells. It's that simple. Here is the chart of the euro dollar, and you can see this just fell through the floor right here. This is a Fibonacci area. Once a support area like this gets broken, it's very likely to continue. There is no pullback on this, and part of our signals is basically looking for pullback trades. And this is one of those rare instances where the market just went one way with no pullback. But basically, once you get this signal like this, you're looking to sell the low of this. And you might get stopped out first with 7 or 8 pip loss. As soon as it starts going back down, you go short again. Let's just say when it goes a pip underneath that bar at 24.50, you get out of this trade down here at 25. So you lose 7 pips, you make 25 pips. And a lot of people wait, once they get these signals, for the trailing stop to get hit. You can see the sell signal is here, waiting for the trailing stop, get you in right here, and you're short at 48, and you're still out of this at 25, and you avoid the loss, as is this one. Sell signal, wait for the trailing stop to trigger, you're short right here at 31, you get out down here at 22, small profit. And obviously this one right here has an 8 pip loss. You get short here with a 2 pip loss, probably 5 pip loss. Once the market goes down to the lower band, basically what you want to do is wait for a deeper pullback. Draw your fibs on the entire wave and wait for, at the very minimum, a 38 to 50% retracement. So that way you don't want to take trades most of the time if it's not incredibly weak below the white band. So you might have taken this trade right here, it went down a little bit, came up. You might have waited for this entry right here, maybe you made 5 or 6 pips. If you waited for this here, you have a small win or a break even, and then this trade right here worked. We have a sell signal just a few minutes ago, but it hasn't triggered if you are using a trailing stop. Plus, anytime you get a sell signal, if you see incredible strength, it's obviously a much riskier trade. This sell signal right here had no strength at all. It was pure weakness. The euro is going down versus a very high percentage of pairs. The dollar is one of the strongest, and it was doing so with incredible intensity. Anytime you get a pullback up while this is still red, it's a very high win rate, 80% or so. Another of the ones that was weak last night was the Swiss. So you buy the dollar versus the Swiss. Now, the key to trading small losses, big wins. You're not always going to have, huge wins. In this case, the market just took off. This pullback here also really had virtually no weakness. You have a buy signal right here. If you waited for the trailing stop to get in, you might be in here around 50, and you're out at 65. You only made 15 pips. The triangles are trend trades. The circles are counter trend signals. So if you think this currency's gone down 3, 4, 5 days in a row, and it's near our green band, which is almost always a reversal area, you get one of these counter trend signals, you certainly can, pick up 5 to 25 pip counter trends. And anytime you see the previous day's low like this come up to it, it's resistance. Normally price continues down. In this case it didn't. A lot of times I will buy once it breaks back above the previous day's range. That way I have a tight stop right underneath the previous bar's range. 5 pips per bar plus 1 pip padding plus spread. You got 7, 8 pip maximum loss. And obviously you got to identify what kind of personality type you are. My goal in trading personally is to improve my life and my family's life. I want to make money. I don't care if I have 2 or 3 losses in a row. It rarely happens, but I don't really care if the trade works or not because I know always my loss will be small. Now, every once in a while, you forget to check when news comes out and you might be in a trade and, maybe you forgot to set your stop yet and you might get whacked with 30 pips. It happens, but, maybe 1 or 3 times a year if you're an active daily trader. It doesn't happen that often, so most of the time you're going to have 7 to 10 pip loss. You get into this trade right here and follow the trailing stop up, buy the pullback, make another 15 pips. And again, once it hits these green bands, usually it's the end of the move. If you go short right here, you can follow it back down about 10, 15 pips. And notice that last wave right here, this double top, had incredible strength the first time, almost no strength the second time. That's a no-brainer counter trend trade. Especially when currencies are above the white bands or below the white bands, usually you're going to get a reversal. Let's scroll back to yesterday. This came down, hit our green band. Most of the time, probably 90% of the time, the green band is going to be the maximum price it's going to go to. Wait for it to go a pip above the bar's high. In this case, it didn't. Here it did. Went up maybe 7 or 8 pips, enough to move your stop up near break even. You get in this one, you make 15, 20 pips. So you made, let's say you took this one, lost 7 pips, made 7 pips, made 20 pips, made 8 pips, whatever. The New Zealand earlier today was also weak. The 15-minute trend was down, the hourly trend was down. However, the daily, weekly, monthly trend was up. So you certainly can take trades like that by selling the New Zealand dollar, but look for a smaller profit when all the time frames don't line up, especially the real-time ones on the top, the real-time 15 and hourly, and also the daily and weekly. If the daily and weekly are against the trend of the real-time trend, then look for a 15, 20 pip profit. That's all you should do. So let's bring up the New Zealand dollar and take a look at it. Earlier in the day, this was trending down. You can see a nice pullback up to the hourly. Unfortunately, I'm mainly looking for the longer time frame trends to be in accordance with the real-time trends. And so, there's no 3 or 4 bar pullback sell right here or here. If the longer term trend was down, there would have been a sell signal here and here. But anytime it comes up to the hourly, you see it's one of the weakest ones. You can use our trailing stops to get in. 75.61, you're out here at 36. And anytime a currency doesn't break the 1.5 red band, usually it's going to go up a little bit. You don't want to take these sells here or here. Maybe when it comes to a major resistance area like the 10-day moving average right here, you might want to go short. You can see it pulled back 15 pips. There was quite a bit of strength on the way up here. On the way down, there was some weakness, and then all of a sudden the weakness disappeared. That's usually a sign of, the market's going to go the other way. If it's going down, and it can't even touch the previous swing lows, and the intensity is 1/3 of what it was just a little bit ago, the move's over. I like to end today's blog by showing a new feature that's going to be in the next version of our software. If you bring up a chart, the Control F key brings up our Fibonacci tool, Control F, and in the past when you drew it on the chart you didn't know what the price was, where it was at, and it didn't snap to the bar's high and low. The new one does. So when you left click on the chart here, you can see it shows what the high was up there, 1.2531. Next to that is the number of pips, 68, 70, 71, 72. As you can see as I bring it down, the number of pips on that swing goes down. And when I let go of the bar, it's going to snap to whatever that bar's low is. Watch. See that? So now you have perfectly drawn fibs. Before, it's quite easy to go past the bar's high or low by 5, and sometimes on a weekly or daily chart, maybe even 10 or 15 pips, mainly because your mouse is over top of that bar, and it's very hard to line it up. Now when you let go, it automatically snaps. If you don't want it to snap, as you can see, it automatically snaps. If you don't want it to snap, then hold the shift key in, and when you let go, it will not snap. Simple as that. You see? Let go of the shift key, move it, and it will, watch, snap. So that's a new feature that's coming up. And if you don't want to see the levels on there, you can right click on the chart and then disappear. Anytime it's selected, you can see the price at the high. The price at the low is 24.15. It's very intelligent. As you move it over to the right hand side, notice it flips so it doesn't get taken off the screen there. And again, it automatically snaps, so you have the perfect areas, and so therefore your Fibonacci profit targets and Fibonacci retracement levels are going to be perfect. If you didn't have this, more than likely you would draw this. I'm going to hold the shift key in here. You bring your mouse down here and you just let go of it like this. It still looks okay, but it's not 100% accurate. You might be getting into a trade 2, 3, 4, 5 pips, sometimes even 11 pips on daily and weekly charts too soon. And so, of course, what happens is the price runs by, stops you out with your 10 pip stop, and you're sitting there with a loss, and then it does exactly what you thought it was going to do, and it makes a 30 to 50 or 100 pip move, but you didn't get back in because you just took a loss and you're afraid to. So this is going to dramatically improve the accuracy of the Fibonacci areas and the accuracy of my trading zones each night. Remember, I spend 30 or 40 minutes every night doing Fibonacci analysis on weekly, daily, 30, and 240-minute charts for all 12 major pairs that we trade, all the dollar and yen pairs basically, and they will show up on your chart with the script called trading zones. This is going to dramatically improve that. It also allows you to have much smaller charts and get the same accuracy of a bigger chart. Control F. Draw this on here, it automatically snaps. It's perfect. In the past, you'd have to have quite big charts to, accurately see these areas. And even with them, you can see, let go of it, it's not quite on the high. Maybe it's a pip off or something. So this is going to improve everyone's Fibonacci drawing and mine, which will also improve your trading with the slightly more accurate trading zones.